Well, joining us for a look at the day's markets action is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. Quite a mixed picture that we are seeing there in the markets, and it's actually quite interesting to see how investors are trying to position their portfolios at the end, the last week of a very, very strong month. What is setting the tone for the markets at this point?
You are right. We continue to be cautious given that November so far we've made some serious gains. I mean, the local boss just for November is up almost 8%. But, markets will keenly be waiting for the inflation numbers coming out of the US and European Union, and also the PMI numbers coming out of China. Back home here as well, we'll be looking into our producer price index and also our PMI numbers. But remember, stocks have been going up, and as a result, bonds have been rallying, and then as a result that was dragging the dollar down. But the point here is that markets, we've seen that for the better part of last year and this year continues to be driven by the expectations when it comes to central bankers. So hence those kind of inflation numbers continue to be very critical for most market players. And the dollar itself, we've been seeing that for the fact that people think that we might get a cut when it comes to interest rates next year, not doing that great, and that also to some extent managed to benefit the rand itself, and also some of the commodity prices going up has just given some of the cushion when it comes to the rand itself, as we know that the rand itself is a commodity currency.
Yeah, well, talking about the rand, because it is still quite weak at the moment, we're probably going to get a lot of tourists flocking in and actually hiring cars. So let us go to Zeda. So Zeda came out with its first annual results as a listed company today, displaying their double-digit growth in revenue, core profit, and also headline earnings per share. We did see investors flocking in there with that share price climbing 4%. I mean, it's quite interesting actually how investors are reacting right now, because it didn't look like investors were quite convinced at the beginning when the company listed, but it seems that they are slowly trickling in. Has the tide turned for Zeda?
I think to some extent, yes, their strategy has worked. Yes, we've seen that the guys look into their rental business. The guys managed to increase their fleet to get more of corporate clients because there's demand out there. Look into their leasing business as well. The guys pushing into the heavy commercial as well. Why? There's some demand as well. I think the lagger here continues to be the car sales, as we've seen that the used car market is struggling because there's availability of more new cars and also high interest rates biting. But yes, for them to be able to settle that unbundling debt, 2 months ahead of time. I mean, we're talking a whopping 1.5 billion. That itself confirms that, there's something going on here. So it's worth it having on your radar screen.
Yeah, indeed, because that debt has been something that investors have been concerned about. So it really is encouraging to see that there is significant movement being made there. Let's go into banking, Makwe. Standard Bank released its 10-month trading update today. The bank says its 12-month guidance remains intact. Quite interesting things that they came out with there, saying that the credit impairment growth is expected to moderate in the second half of 2023. Also giving interesting insights on the consumer situation and its impact on the bank. Did anything stand out for you there?
Yeah, as we've seen, there's as much as the impairment costs have been slowing down, but they're still at elevated levels.
Yeah.
As much as we've seen that the revenue, continues to go down, but it's still above 20%. And we've seen that it's all because of this interest income, revenue growth thereof, and also non-interest. And we'll know that when it comes to non-interest revenue income, because they've managed to acquire more clients, they've managed to increase their prices, that helped as well. But you look into the mortgage part of things, it just shows that there's a big struggle on that, and that affected the disbursements, and that's to both retail and business clients as well. But the long and short is that elevated interest rates, which are expected to stay much longer, will definitely have a negative impact on the guys. At some point, consumers find ways to cope, but to get to a point where you don't have anywhere to go, then it becomes more of a struggle. The only thing we can console ourselves is that probably we're not going to have interest rate increases going forward, but definitely what is certain is that interest rates will stay this high. So I think that's something that is worth watching.
Yeah. Well, another counter that got the favor of investors today is Oceana. We did see its share price there up about 3%. And of course, they released their annual results saying that their revenue rose 22.6%. And that growth did translate to the bottom line as well, where we saw a headline earnings per share growth of over 29%. Would you say that at the moment Oceana is on a high tide? Because I do know that these counters, these fishing counters, tend to be quite volatile.
They are very volatile. It's more of a cyclical stock. The reverse can happen. Look, they had losses, that of almost 23 million, when it comes to foreign exchange, So this time they've managed to have foreign exchange gains, double that, of 46. And in an environment where there's demand of your product and you're also able to raise prices, I think that's a win for them, We've seen that when it comes to fish oil, they managed to increase prices. And we've seen that as much as consumers continue to be constrained, but the demand or the volume when it comes to Lucky Star continues to be very decent. And globally, demand and pricing managed to help them.
All right. Well, let's get to your stock pick for today, Makwe. What are you choosing?
I think I'll go with Mr. Price for the fact that we've got almost 87.9% of their sales made out of cash sales. That's good, given the elevated, interest rates, and for the fact that the guys had profits going down by almost 9.3%. We all know that mainly is because of those 60,000 hours that they lost of trading, equivalent to almost 190 million. And also the fact that they had high inventory, the guys were forced to have some high markdowns. So we don't expect that to continue going forward.
All right. Well, thank you so much for your time and for your insights on what has been driving investors' money today, Makwe. Appreciate it. That was Makwe Masilela from Makwe Fund Managers.